Let's talk about the difference between investing and trading. Which one is right for you? Have you ever heard someone say, I made money trading Forex, while another say, I have been investing in stock for years? At first, it sounds like the same thing because both involve putting money into financial assets with the hope of making a profit. But here is the truth. Trading and investments are not the same. If you don't understand the difference, you could end up using the wrong strategy, taking unnecessary risk, or setting unrealistic expectations. In today's episode, I will explain the difference between investing and trading in the simplest way possible. By the end of this video, you will know exactly which one fits your personality, your goals, and financial situation. Let's get into the video, guys. What is investing? Imagine you buy a piece of a great company today. You believe that over the next 5, 10, or even 20 years, that company will become bigger, earn more profits, and increase in value. So instead of worrying about what happens tomorrow or next week, you simply hold your investment and allow time to do the heavy lifting. That is investing. Investing is the process of putting your money into assets with the expectation that they will grow in value over the long time, while possibly generating income through dividends or interest. Think of investing as planting a tree. You don't expect fruit tomorrow. You water it, protect it, you give it time. Eventually, it becomes something valuable. What is trading? Now imagine something different. Instead of waiting years, you are looking for opportunities to buy today and sell tomorrow or next week, or even within a few minutes. Your goal is to profit from price movement. That is trading. Trading focuses on taking advantage of short-term price changes rather than long-term business growth. A trader doesn't necessarily care whether a company is still around in the next 10 years. They focus on one question: can I make money from today's price movement? Simplest example, let's us use tomatoes. An investor buys a farmland. The investors wait for months for the harvest because they know the value will grow over time. A trader buys tomatoes from the market in the morning, sell them later in the day when price increase. Both make money, but they do it differently. That's exactly the difference between investing and trading. Key difference number one is time. Investors think in years, traders think in hours, days, or weeks. If you are constantly checking price every 5 minutes, you are probably trading. If you are buying quality assets and holding them for years, you are investing. The number two difference is the goal. The goal of investing is long-term wealth creation. The goal of trading is generating profits from short-term price movement. Neither is wrong. They simply mean different things. Number three difference is analysis. Investors study businesses. They ask questions like, is the company profitable? Is the revenue growing? Does management take good decisions? Does the company pay dividend? Traders spend time studying price action. They analyze trends, support and resistance, volume, momentum, and trade technical indicators. One focuses on business, the other focuses on price. Number four is risk. Trading generally involves higher risk because price can change rapidly. A single bad trade can wipe out weeks or even months of profit if proper risk management isn't used. Investing also has risk, but long-term investors have historically benefited from the power of economic growth and compounding. Time often helps investors recover from temporary market declines. Number five is stress. Let's be honest, trading can be mentally demanding. You need discipline, patience, emotional control, fast decision making. Investing is usually less stressful. Once you have done your research and build a diversified portfolio, you simply review it periodically instead of watching every market movement. Can you do both? Absolutely. In fact, many successful people do. You can invest 80% of your money for long-term wealth while using a smaller portion for trading if you have the knowledge, experience, and discipline. The important thing is not to confuse the two. Don't invest with a trading mindset and don't trade with an investing mindset. Know what you are trying to achieve before you put your money into the market. Which one is right for you? If your goal is building wealth for retirement, buying a house, paying for your children's educations, or achieving financial independence, investing may be more suitable. If you enjoy analyzing charts and manage risk effectively, accept losses as part of the process, and have the time to monitor the market, trading might be an option. Remember, trading is a skill, investing is also a skill. Both require continuous learning, neither guarantees profits. One of the business financial mistakes people make is chasing quick money. They hear stories about somebody doubling their money overnight and assume that's normal. It isn't. Whether you choose investing or trading, success comes from educating yourself, discipline, patience, and consistency. Don't let social media convince you that wealth is built overnight. Real wealth is usually built slowly, deliberately, and over time. So let me ask you this. Are you an investor, a trader, or you are planning to become both? Let's know in the comment section below. If you found this episode helpful, don't forget to like this video, subscribe to the FMB podcast, and share this with someone who wants to make better money decisions. Until next time, keep learning, keep investing wisely, and remember, financial freedom is a journey, not a destination.